Welcome back to Upside Down Data. We need to talk about what's happening with Bitcoin and crypto. So, as I'm sure everyone is aware, crypto has been doing very poorly recently. So, Bitcoin finally has started to show some pretty extreme weakness here, breaking down below the range lows that got established all the way back in November of last year. And it sure seems possible that we're going to go down and retest some of these lower levels. Some people are even saying we have to go back and back test the highs of this previous range to turn that into support before any hope of upside might come. And obviously, this is not just Bitcoin that's showing weakness. Bitcoin actually has held up remarkably well relative to a lot of other crypto assets. Just look across the board, Ethereum is already back down to where it was throughout 2024, or much of it in this middle part of 2024. You go and look at an asset like Solana, it's also all the way back down to those levels. Asset like Chainlink is already back down into those levels. Avalanche has gotten absolutely decimated. Then there's some that have gotten absolutely destroyed, like, for example, Thorchain just absolutely crashing off a cliff. Things are bleak across the entire altcoin market. So what I want to talk about first is the context in which all of this weakness is happening. Is the bearishness that we're seeing in sentiment, people saying that the cycle's over, is that something that's maybe irrational based on the broader context? And then I want to talk about what our models say and what they suggest. Because of course, with this channel, we always come back to the data. We don't just leave it at narratives and emotions. So let's talk about the broader context. So crypto is not the only thing that's been struggling recently. So the stock market, at least in the last few days, has been falling fairly aggressively, although it's hard to argue that this is some kind of crash at this point. This very well could turn into a higher low, then go on back up again. But one of the reasons why we're seeing potentially some weakness more recently is that there are things in the broader macro landscape that don't look super great for stocks right now. One of the things is really Trump's approach to foreign policy. He tends to take more of a madman theory to international relations. Basically, the idea here is that you convince the rest of the world that you're kind of crazy. You're willing to do anything. You're willing to do whatever you want, or are willing to do even self-destructive behaviors to punish others or to bring, negative results to them, that they'll take you more seriously, and that might help you in negotiations. Now, unfortunately for Trump, historically speaking, this has not worked out super well, but it can help explain a little bit his approach to things like the extreme tariffs that he says are going to happen on Canada and Mexico, which would be inflationary. These are massive tariffs, 25% tariffs. They would cause prices to rise. That's part of why consumer confidence has fallen, because people are anticipating that this could happen, especially in a context where we've already seen sticky inflation. And that then, of course, makes the Fed's job more difficult, because they might not be able to cut rates anymore. They might actually have to raise rates in the face of new inflation, which would then put more stress on the job market. And then you risk something like stagflation, not a good outlook. Now, obviously, a lot of people have a lot of different opinions about the macro context. I'm not going to get into that all that much. You have different opinions. That's totally fine. But these are some of the things that I think are roiling markets right now. Markets do not like uncertainty. And one of the things that this madman theory approach does not do is give certainty. The entire idea of this is to be very unpredictable, so that it's hard for anyone to really know what your next move is going to be, so that people have to take anything that you say seriously, and that's kind of all baked into it. It's kind of literally this idea of madman. You can't predict what a madman is going to do. And so based on that, stocks and risk assets like crypto are probably not going to like that environment all that much. It makes it hard to take excessive risk, because you don't know if Trump might just pull the rug out from under you, just implement some crazy sweeping policy that then suddenly tanks the market. It's hard to be risk-taking in that environment. It makes more sense to hold your cards closer to the chest and proceed more cautiously. And so that's really the backdrop we're going into here. And so obviously there have been things internal to crypto that have not helped. We had the Bybit hack, the largest hack in crypto history in dollar terms, which has been negative. And then, of course, there's been the excessive meme coin scamming that's been happening that's really extracted a lot of value out of the space. One of the reasons why Solana is probably tanking so hard, and has really taken a lot of the fun out of the altcoin space. No one enjoys just getting scammed repeatedly, probably a lot of people are exiting the space as a result. So the things internal to crypto that have not been going well, then you pair that with a not particularly great macro environment from a risk-taking perspective, makes sense why things are struggling. All right, but with all that said, that is the narrative. And that's one of the reasons why people are so bearish right now. And of course, as most people probably noticed, many people are bearish right now. It is extreme bearishness. And you might look at Bitcoin even still being at 88K and saying, why are we bearish? We haven't even seen a very notable pullback yet from these all-time highs. Could we just do something like we did back down here in 2024? And that's what I want to now talk about some of our models. What they're seeing is cut out the noise and just see what do things actually look like from the market cycle perspective. Is the bull market thesis still intact, or do we need to reevaluate? Let's get into it. But first, if you want to see live data from our models and more, you can go to our website, polaritydigital.io, link in the description. If you sign up for our Polarity Digital Pro plan, you get live access to live data from all of our models and more for Bitcoin and a bunch of other altcoins, in addition to things like on-chain data. Check it out if you're interested, link in the description. Okay, so the first model I wanted to talk about is our upside downside potential indicator, or UDPI. So if you've been following the channel, you're very familiar with this at this point. This is the long-term version of the model that cares about moves that play out over months to multiple months, so longer in its time horizon. High values, high risk, low values, low risk. And you see it does a very good job of identifying these high risk periods in Bitcoin's history, as well as these low risk periods when acquisition has been historically advantageous. Now, what's notable about more recent behavior of the UDPI is you'll actually note a pretty interesting symmetry between the all-time high that we put in back here in early 2024 and the all-time high that we put in back over here in December, then going into this year. Technically, the absolute all-time high for Bitcoin is technically on this wick right here in January. But looking across both of those, what you'll see is this symmetry where we kind of bumped our head at literally almost the exact same long-term UDPI level, about 2.4. And then down we've gone since. Now, what's notable about this falling off of risk is that we still have not gotten especially far down yet. We haven't even gotten back down to the levels yet that we did here in mid-2024. And so if our thesis, if one of our theses is that one of the paths for Bitcoin, as we now are losing this range low here potentially, that maybe we see something like here in 2024, that is certainly possible. And it might mean that we might expect lower risk levels, that we might expect this to fall off, a bit lower risk to come, and then we might just have a lot of volatility in the meantime, kind of chopping around, maybe slightly downward trend, but longer time before we have that, next push up to a higher level. So it's certainly possible that that could happen. Now, the bearish alternative that we could look at, and caveat here, there's only really one example of this, is that there was a historical example of us putting in an all-time high, then going into a bear market. That was back here in late 2021. Now, very different context back then, of course, and what was happening in the world and what led into this. But just from a pure UDPI perspective, that's the one example where that happened. So when we look at this, I really think this is yet to be determined of, are we in a bear market? But looking on this, you can recover from these risk levels without going into bear markets. That's happened multiple times. It happened back here in 2023, more or less happened back here in 2017, here in 2019. And then this was the one sole exception here in this November peak. Technically, we did recover from the September peak and then put an all-time high after that. So most of the time you can recover from one of these in a bull market. It's not marking the end. Where you have to get really concerned is that every time we've gotten to these extreme levels, every single time after that, we've entered into a bear market. So when I look at this, I don't think this means we have put in the top and that is all over. But certainly when I look at the current risk level, I don't see it as deep value territory yet. And I think it's totally plausible we continue to fall off here going forward. And only once we get, really deep on the low levels would I say, all right, now I'm going to kind of put aside some of the concerns maybe from other things and say, historically speaking, this has been a good time to buy Bitcoin. And so it might be a time to really pay attention. This is more contextual where we are right now. When you're at negative 1.43, whether or not that's deep value is really more based on the context around you. And is it kind of irrational bearishness that people are exhibiting? So there's no actual reason to be concerned, but everyone just is concerned because price is going down. Or is there broader concerns that might suggest the macro context for risk taking is not really there, that kind of would go along with a more bearish outlook? I'll leave it up to you to make that decision for yourself. But personally, I'm not in the camp where I think that there's zero reason to be concerned at all going forward. Again, that's not what I'm going to base my ultimate evaluation on. I'm going to base it on the data. But you're just looking at that contextual piece. I don't think we're at a point now where people being super bearish just makes zero sense at all and is totally irrational. That's my 2 cents there. Okay, so the next model I want to talk about here is the DXY based fair value for Bitcoin. So this is the fair value of Bitcoin based on what the DXY, the strength of the dollar relative to a basket of other fiat currencies, is. And the reason why we care about this is that Bitcoin and crypto in general tends to be inversely correlated with the DXY. If we just look at that here, when the DXY is going up, crypto tends to struggle. When the DXY is going down, Bitcoin tends to do well, historically speaking. So you know where the DXY is. It actually tells you a lot about where you might expect Bitcoin to be. And you see it's done a very good job being able to identify these points when prices have gotten really outstripped, really too far away from fair value, and needs to revert back to it. And vice versa, when it's undervalued, it needs to move up towards it multiple times. In fact, more recently, this period back through here in 2023 is one of the reasons why I was so mega bullish. There was this huge divergence between fair value and price, and indeed we did rise up to meet it. And then we kind of traded blows. We got overextended at this all-time high. We then had to chop until we got back down to it. And then only once it got undervalued again were we able to set up that next move up. But now we're overvalued again. And that's really the thing that I'm going to come back to with this chart. And I've talked about this really since we got here, is that one of the things you have to be worried about is that we're above fair value. And that might mean that Bitcoin could struggle to do much impressive until it gets back to fair value. Now, the good news is fair value is trending up while price is trending down. And that means we might more quickly get to fair value than we might have otherwise if fair value was just going flat. And so it wouldn't surprise me if in not too long, assuming we don't see some massive rally on the DXY here that just sends it shooting up and then changes what that fair value trajectory is, that we will get back to a point, something like this maybe, or maybe even more deep value than that coming up. And that would be a territory where I'd be more inclined to say, all right, we're under fair value. It might be more reasonable now to think that Bitcoin can stage a reversal. We're not there yet. I'm going to be watching this closely, but the good news is we're getting a lot closer than we were back over here when we really had this massive gap between fair value and the price of Bitcoin. Really the biggest gap we've had ever since this bull market started. So something to keep an eye on for sure. Now, the final thing I want to keep on coming back to here is our market cycle model. This is what I kind of view as one of the final lines in the sand for when this bear market might be over. One of the things you might look at to say, all right, that's it. This bear market's over, or very close to being over. And so this is a model that tries to very quickly identify when you transition out of bull markets into bear markets, and then vice versa, out of bear markets into bull markets. And you see it has done a very good job with each of these cycles. And again, one of the reasons it got so bullish back over here is because we got this model to flip bullish in early 2023, late 2022. That was when we then saw this monster rally out of it. So if we just zoom in on the more recent price action, the good news is that price is still way above this critical level. Basically, as long as price is above the critical level, that's bull market. If it gets below it, that's bear market. Critical level still is at just under 53K. So price is still way above that. So from that perspective, this model is going to give Bitcoin quite a bit of room to work with now. So even if Bitcoin did do something like come back and have to retest the low 70Ks again, from the market cycle model's perspective, that wouldn't matter at all. It wouldn't care as long as we don't see this blue line here jump up suddenly for some reason. That can happen. You will notice that in these kind of tops, you'll see that blue line shoot up aggressively. So as long as that doesn't happen, we'd still be safe though if that were to happen. And so when we look at kind of across these different pieces of data, then I still think it's too early to say that the cycle is over. Some people are already declaring that, saying that that's what it is. At least for Bitcoin, I think it's too early. Obviously, with the altcoins, they've been getting hammered, they're getting wrecked. But generally speaking, crypto tends to be correlated. So if the bull market for Bitcoin remains, then I think that altcoins will have a resurgence at some point. It's an open question with a lot of altcoins if they will be able to ever set new all-time highs. That's something we'll have to see. But at least for volatility, notable upside volatility, I think that would come back if we saw Bitcoin rally, for example, to even higher all-time highs relative to what it already has. And so that's why I like to really keep an eye on Bitcoin, because if Bitcoin loses its bull market status, I think it's very unlikely that altcoins are going to have any hope of recovering it. But as long as Bitcoin remains in a bull market, that's where you might still consider that, even though in the short term, with everything that's going on right now, It certainly doesn't mean that altcoins don't have any more room for further pain. I think that could absolutely happen. But generally speaking, when you're kind of looking for those alt seasons, kind of those few periods where being in altcoins tends to outperform being in Bitcoin, I think those still can happen as long as Bitcoin remains in a bull market. So then across all of these, I'm not ready to throw in the towel yet on the Bitcoin bull market, but short to medium term, I am concerned. And it's certainly not going to be the case that I'm going to be holding blindly to this bullish thesis. And if we see some of these models really flip and say, all right, that's it, I'm not going to be standing in their way. I'm just going to follow the data. If the data flip bearish, that's it. I'm going to believe it. I'm going to agree with it. So it's up to you to navigate the market as you see fit. None of this is financial advice. You should make your own opinions. You can have different opinions about the macro side. You can have different opinions about the interpretation of data. That's all fine. You should do what makes sense to you. All I'm doing here is just speaking my opinion, what I'm seeing. And what I'm seeing right now is that just the way that Trump has tended to conduct himself, and this is not something crazy I'm saying here, I don't think. If you learned anything from Trump last administration, and certainly what's been going on in this administration, Trump basically brings in chaos. Chaos is a big part of his governing style. And some people like that, some people hate that, but it's just a reality. That's what happens. And markets tend to not like chaos, especially when they're around things as potentially market altering as extreme tariffs. So from a kind of risk-taking perspective, from more of that kind of macro side, or maybe you call it narrative side, whatever you want to call it, but there is real parts behind this. It's not the most conducive thing to risk-taking. You're always going to have to be worried about those tail risks of, is Trump just going to announce some crazy new thing that's going to tank the market? You don't know. And again, that's all kind of part of his approach to policy. And so there's bigger tail risk, which might mean that markets are just less likely to YOLO into some risky thing. They're less likely to YOLO into some random altcoin because they don't know if something all of a sudden could make that thing drop 30% in a day, for example. And so that's where I think we're going to have to really watch what happens, especially on the back of these potential concerning signs with inflation and how the types of policies that are really making markets upset feed into those exact things. So I think we have to be aware of the broader context. But that being said, the data do not yet support abandoning all hope and just despairing, in my opinion. Now, that doesn't mean that you have to just be full on bullish either. I think that's a really critical thing. A lot of people in crypto tend to see the market in extremely black and white terms. They say bullish, bearish, I'm going to be all in or I'm going to be all out, and that's it. Nothing in between. And I get upset if anyone says anything in between. I can only accept one or the other. In my opinion, that's a very poor way of navigating markets. A very reasonable way of navigating a market is to hedge yourself, is to say, all right, it's uncertain times. How much am I willing to risk in this time, and understanding if risks are higher or lower? And there's nothing wrong with having a portfolio that's split between cash and being invested. That's a totally reasonable thing. That's what professional investors do all the time. They manage their portfolios, they manage the risk. So going from here, that's just inherently what it is. We could go into a horrible bear market, at which point a lot of people will be really mad. They'll say, oh man, why didn't I sell everything up here? But then it's also possible we just go ripping off new all-time highs, in which case anyone who sold here would be mad that they missed the upside. But if you don't know which of those is going to happen, maybe you just play both sides. You say, all right, maybe I'm just going to take some risk off here. Maybe I'll split 50% cash, 50% invested. If we go up, at least I'll capture that upside. If we go down, at least I won't take that loss. That is a totally reasonable way to navigate it, and it's really up to your own preference and how you want to navigate it. But I really just want to break through that, in my opinion, nonsense that happens all the time in the crypto space, especially on crypto social media, where people think that you have to be 100% in or out, you have to either win or lose, and there's no such thing as managing risk or hedging, or that's in some ways wrong or dumb to do. In my opinion, that's an incorrect way of looking at this. Though again, not financial advice. If you think that's the correct way, more power to you. Go ahead and do what you think is best. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us over at X. I'll have updates from our models and more over there. And if you want to see live data from our models and more, you can go to our website, playerdigital.io, link in the description.